Now again, these are not recommendations. These are the same companies I put up every year just for reference. And I use the same 12-month period, September, to give you a reflection. And the first thing you can see is have a look at the size of the profits. And this is the thing again as society that we've gone off the rails. We have corporations making incredible sums of money. BHP making $12.9 billion after tax. HSBC 15, Bank of America 26, 10 billion for CBA in Australia. Microsoft made 72 billion US dollars after tax. Now this is an incredible amount of money, and as a society we should be questioning and saying, how did you do that? That doesn't seem right. And this all feeds into my theory of greedflation. To make this sort of profit, they're making incredibly high margins, and they're congratulated for doing that. But this is what creates inflation. This is what creates separation of wealth, from the high to the low. This is something that as a society we need to talk about at a better level. In the US, under the Trump government, they reduced corporate taxes. That didn't make sense to me, still doesn't. And when you're making this sort of money, you can afford to pay 5 or 6%. In Australia, corporate taxes is not an issue because it flows through to the individual. But we need to have a conversation as a society whether this is fair and just. But what it does say, if you are a stock market investor, it's unlikely any of these companies will go broke if they're making billions of dollars a year in profit. So you don't have to be concerned if that stock price dips because the company's not going anywhere. If you see a good company making a good profit like this and that share price has a mini crash of 5%, buy it. It's a bargain. It's on sale. I love to go shopping when the sales are on. If you look at the returns, okay, BHP, its profit went down more than half, but its share price went up 3%. Strangely, the year before, when its profit almost tripled, its share price went down 12%. And you can see the weird thing about this whole list here is it makes no sense. In theory, if your profit goes down, so too should your share price, but it went up. If your profit goes up, your share price should go up. Nothing makes sense anymore because it's all pushed and pulled to make that volatility stronger and stronger. So again, don't be worried about if it's not heading in the right direction unless there is a fundamental shift in what the company is doing or changing. But you can see these profits are superb. Those company profits will flow into share price eventually, and if you see it cheap, buy it, and that just makes sense. Overall, if you have a look at the various indexes, the Dow was up 7.5% on the year, which is as we predicted last year. We thought it would move back into positive territory after a negative one last year. The Aussie market and the All Ordinaries was up 3.5%, which was a tough year, not too bad a result, up from a negative. And the FTSE, even though it was the best performing over the 2 years, the FTSE was the worst performing over this 1 year band. And that's the thing about statistics. You can move them to suit your argument no matter what. But that's why I leave these the same every year, so we're always comparing apples and apples. So my first prediction in the night being the stock market, I think we're going to see that volatility continue. I think we're going to see the era of the mini crash continue and manifest. But I do think we're going to move into general positive territory. But you want to be buying quality, particularly when it's cheap. You want to be buying dividend for safety. But I think you'll find that the stock market will have a reasonably good year despite all that's going on in the world, in Ukraine, in Middle East, etc. So that's prediction number one, a decent year for the stock market.